Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. I think Tesla is in a league of their own. No one else is close to Tesla specifications, and no one else can produce their cars anything close to the cost that Tesla does. And the Tesla we measure today isn't even really where we are in reality. Everything we're comparing against Tesla is the level Tesla were at a couple of years ago, and everyone is still coming up short with this old technology and production size. I'm not going to stop saying this, as no one says it nearly enough. Tesla will soon have capacity of 4 times as many vehicles, and have a revolutionary new battery technology that is orders of magnitude ahead of the competition. This should be your mantra you say to yourself whenever you feel down about Tesla because the stock price has dropped $20 or there was another reported alleged FSD crash. Yet we hear EV companies showing off their impressive specifications at affordable prices that won't be launched until 2025, yet comparing themselves with technology Tesla was using 10 years ago. Spoiler alert, in 2025, Tesla will have new technology. Tesla just don't need to advertise how impressive the range on their cars will be in 2025. Anyway, I have a simple theory that Tesla will continue to sell every car they make and make as many cars as they possibly can. I don't think any company is going to get in the way of this force. The competition can't sell their EVs much cheaper than Tesla, or they will lose too much money too fast. They can't spend more money on R&D to out-innovate Tesla, or they'll innovate in the wrong direction. Tesla built this industry. All other EVs are tourists in Tesla's world, including Tesla's charging stations and FSD. EVs are Tesla's world. There is no one else coming close. But as for the others, we can label them into 3 subgroups: the legacy autos, or incumbents, the Chinese autos, and the newcomers. Firstly, the newcomers like Rivian and Lucid, well, we can dismiss them for now. They have a very long journey ahead of them. They're about where Tesla were in 2008. Granted, they have a clearer path of where to head and significantly more capital, but that may come with disadvantages too. Think how early Elon was with Tesla, and how he had to grow the company from the ground up. With so few employees, you have to learn almost every aspect of the business. It's different when you have capital and can simply throw money at various tasks. As a result, Tesla grew up very lean, with minimal wasted capital, and has maintained that ethos in the direction of cutting costs. Even the amount Tesla spend on R&D is minimal relative to their market cap and revolutionary new products they generate. But anyway, the newcomers have barely even delivered 1 car yet. They show no signs of anything innovative, let alone affordable for the mass market anytime soon. They have a very long, slow way to go, and likely many issues still to run into. That leaves the incumbents and the Chinese autos to fight over whatever Tesla leaves. Tesla is cutting right through the mainstream auto categories, where demand is the highest, and designing cars that will meet a lot of people's uses, with designs that could be considered basic by some, but will age well, and remain timeless in design. They're actually very good looking cars too, especially the Model Y. But there will be minimal variety of Tesla models available. So what is left? Well, there is the low-cost segment of the market, those consumers who want a new EV but simply can't afford to get a Tesla. As a result, they're willing to sacrifice FSD and range in order to get into a brand new EV. This will be the market the Chinese will aim for. The issue is that Tesla actually make their cars cheaper than the Chinese. So how do you undercut a company on price that makes their superior products cheaper than you can? That's a good point, and it's not easy. The method the Chinese are choosing are to simply offer less range, allowing them to use the cheaper iron-based batteries, but offering under 200 miles of range or even less. But some people are okay with charging their car every night and only having enough range to get back and forth from work and a few other destinations. They don't need a car for long road trips. The cheapest EV that is safe enough for overseas might be the BYD Dolphin at around $16,000 before any subsidies. Of course, if this was to enter in the US, there'll be the 25% tariffs and extra shipping costs, so it's already around $20,000. Meanwhile, before long, there'll be a $25,000 Tesla Compact too, likely with about twice the range. Oh, and maybe even an $8,000 tax credit. I don't think the Chinese have any chance in the US, where Tesla lives. Perhaps some other countries though, like Norway, that aren't even members of the EU. Maybe there's a market there for China. Except the thing is, Norway happens to be one of the wealthiest countries in the world, even richer than the US by GDP per capita. They may not be the type of citizens looking to save money, and the EU may use protectionism over any Chinese auto imports and protect the auto manufacturing in France, Germany, Italy, Spain, even Poland and Czech Republic. The UK will also protect their local auto industry, and likely Japan. I mean, we've seen what the US government are willing to do to protect their local car industry, so wouldn't you expect the same? Which makes it very difficult to enter markets at the low-cost alternative if you have to pay huge tariffs. China may more or less just end up serving China with its autos. It's a huge market anyway. The government also offers subsidies for them there. Aside from Tesla, there is less competition from overseas. The legacy autos are going to be too busy trying to secure their domestic market share for EVs. It's going to be far too difficult for them to try and penetrate China at the same time, particularly when there's so many Chinese competitors there too. China might try some other markets like Australia, but again, Australia is a wealthy country too, and has the highest minimum wage in the world, so they may not simply want to save a few $1,000s if it means they can have a Tesla that drive itself. And okay, sure, you may have to pay $200 extra a month for self-driving, but you don't have to. It's still at least nice to have a car with that option. Of course, there may be too long a waiting list for a Tesla, that consumers seek alternatives available now, but how fast can the alternatives ramp up? Not as fast as Tesla. The Chinese autos are much faster to adapt, most likely due to them simply being a smaller company without a legacy ICE business attached to it, but also the way the Chinese are able to replicate. So, in the meantime, they'll try and replicate as much of Tesla's innovation as fast as they can. But if these Chinese auto companies get larger, they will eventually suffer from diseconomies of scale and lose their advantage, which was the ability to adapt to new innovation at a fast pace. Therefore, I see Tesla dominating in every country, including China. Then, in the EU, we'll likely see some of the European brands that made it to transition to EVs. These are just the brands I'm referring to, not necessarily the actual companies. I'm still not sure how these companies avoid bankruptcy. Tesla will dominate the US more than any other country. There may just be a few unique brands left over from the US auto, but I can't see many that stick. The European brands have more goodwill that the market will accept a higher price point. For example, consumers pay more for a luxury Mercedes than a standard Ford. Bear in mind the motor, batteries and drivetrain etc. more or less cost the same for each car. EVs create a significant fixed cost. In order to achieve a desired range, for some auto manufacturers, this cost will be significantly more than the equivalent of what they were paying for the engine. For others, relatively less, especially when you're talking about a V12 Mercedes. It's still tough to get my head around, but look how slowly legacies are launching EVs. Clearly, they're only going to be able to have launched a handful of models by 2025. Not nearly enough to replace their existing offerings. Tesla will just take the rest of the market. Well, Tesla actually already did take the rest of the market. This is Legacy trying to find out what Tesla may have left for them. Again, they have to have Tesla FSD and supercharger network, which will be interesting to see if the Chinese adapt to that. In fact, Legacy needs to take their eyes off Tesla as a target. Tesla's going to grow organically as fast as possible. Nothing can be done to stop that. Legacy autos need to accept that that battle is long lost and move on to the next battle, which is Legacy versus China. If anything, Legacy should be using Tesla to gain leverage against Chinese EVs. Taking on Tesla's FSD and supercharger network is a massive advantage to them if the Chinese don't. But like I said, Legacy will not be able to compete on price against Tesla, so they will have to compete on features and convenience. Legacy will also have to ditch their car dealer Model 2, which may be possible if the EV business is sold out of the company, likely a company without unions either. Again, it's certainly going to be interesting to see how they all battle it out. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.